Hey everybody, Joshua Phillips here with Churchill Mortgage. Well, Happy New Year, Merry Christmas, all the things. Well, we're getting past that now. It is January the 9th, coming to you with first market update of the year. And again, I'm Joshua Phillips with Churchill Mortgage. Also work with my wife Amy and our son Jesse. As I always like to say, if you're working with the Phillips here at Churchill Mortgage, you're in great hands. Well, we are starting off the year with a bang. And first headline I'm going to show you, excuse me, is this one right here on CNBC. It doesn't get much better than that, and maybe I don't need to say much more than that. But right here, mortgage rates dropped to the lowest level in nearly 3 years as Trump orders buying of mortgage bonds. Now, many of you have seen that. I've already had some clients reach out to me about that. So this is something that over the years that the market has done to improve interest rates is called quantitative easing, where they start buying mortgage bonds in order to improve the pricing. And at first I was skeptical, because Trump says a lot of things. He talks about like, hey, we're all going to get like a $2,000 check in the mail for tariffs. I haven't gotten my check. I don't think you've gotten your check either. But this looks to be legitimate. At least the market thinks it's a legitimate thing that they're going to be buying over a period of time, maybe $200 billion, which that sounds like a lot, but I mean, the mortgage market is huge. So, and it's probably not going to happen immediately. This is something that maybe over time, usually it's like over like 6, 12 months, something like that, they will be consistently buying mortgage-backed securities. But hey, overall, you could just say it's great news, and it has led to the best rates we've seen in a while. Just to show the data behind that, we look at, as I always put on these videos, mortgage-backed security charts. Now, all you need to know to read these charts is green is good, red is bad, and the higher the security price, the better mortgage rates are doing. And, we've talked about how the last 3 months, this is a 3-month chart right here, go down here and pull up the last 3 months, rates have not really moved. The fourth quarter of last year, rates did not move more than an eighth or a quarter percent. But here in the last couple of days, we have actually broken out. You'll see the green candles right here to some levels we have not seen in years. Let's pull out here to a 1-year chart. Let's look at the 1 year. Right here, we saw rates were just probably a percentage point higher last May. And now here's where we are, just to give you a visual of where we are today, with security prices being at their best levels of the last year, and really they say over the last 3 years. We can look at a 2-year chart here real quick. I love these charts. So maybe we got about the same spot here back in 2024, late 2024. But we are definitely seeing some of the best rates we've seen in a long time, which is great news. Now, one more thing I'm going to pull up for you. Again, everything's just kind of saying the same thing, which is mortgage rates are improving, and they're pretty darn good. So let's look here. This is Freddie Mac. If you ever want to go to freddieMac.com/PMMS, maybe you're seeing that on your screen, primary mortgage market survey. Freddie Mac has been doing a weekly survey right here since 1971. I always tell clients this is the gold standard in what an average interest rate is. There's a lot of, you can ask ChatGPT, you can Google it, and there's a lot of noise and a lot of information and a lot of false promises out there. But if you go to Freddie Mac, they're really going to give you some really solid information. In their last survey, well, it just came out yesterday, although it was probably from a week ago, 6.16 on the 30 and 5.46 on the 15-year. Rates are pretty good, and next week's survey, they'll probably be a little bit better. Now, I know everybody, then the next question we're going to get is, well, what are rates going to do this year? And the answer is no one ever knows. Now, given this most recent news, it seems like rates may decline a little, not probably super fast. Rates are not going to like drop 0.5% tomorrow, but over the next several months, it's very possible rates could drop another 0.5%. Who knows? Do keep in mind that, this is one piece of information. We could have other, jobs reports and unemployment reports and inflation reports and wars and rumors of wars, and there are always things that can move the market. I don't think you should ever just never assume that rates are going to just go down forever. It's not going to be that way. There are going to be some times where rates go up, be some times rates go down, and there'll be some events happening this year that we've just not anticipated. So always keep that in mind. Well, like I said, overall, this is great news. You got to love this headline. And again, best rates in 3 years. I think it's going to be an awesome year if you're looking to purchase a home, or we're starting to see a good number of people being able to refinance at a rate that makes sense with closing costs that make sense. Listen, we're here to help you if you want to have a conversation about it being pre-approved, you want to have a conversation about refinancing. It all starts with discussing it and getting our professional advice on what you should do. Anyway, we're here to help. Hope you have a great day. Take care. Bye.